1 in 4. That's how many Americans are functionally unemployed in what many are calling a labor crisis, spurred on by AI, mass layoffs, and an American economy that is rapidly deteriorating. But this will impact everyone. It doesn't matter whether you're employed, job hunting, or retired, because it is a sign of what is to come and will impact everything from the future of your savings to the value of the dollar itself. So what's really going on with the labor market underneath the surface, and just how bad is it going to get? How will this impact the dollar, the economy, and life as we know it? And most importantly, how can you use this information to protect yourself before it's too late? Let's get into it. Now, on the surface, our current labor market looks strong, but underneath there are big problems lurking. The media loves to cling to one statistic and one statistic alone, unemployment, like their lives depended on it, which is still sitting at 4.2%. But that number does not even come close to exposing the truth of the crisis that is brewing underneath. Now, a recent study done by the LISEP, a nonprofit organization that does economic research, states that the true rate of unemployment, the percentage of the U.S. labor force that is functionally unemployed, and I'll explain that in a minute, is actually 24.3%. 24.3%. Yes, you heard me correctly. A quarter of the country, 1 in 4 Americans right now are struggling and functionally unemployed. But if you're wondering how this is possible, it's because the technical unemployment rate versus the functional unemployment rate calculate very differently. The so-called official unemployment rate, the 4.2%, excludes part-time workers who wanted a full-time job, discouraged workers who have given up looking, people working gig jobs to scrape by, or underemployed workers that are stuck in low-skill or low-wage jobs because they cannot find anything else, even if they're qualified for it. So this means that a quarter of our country is barely scraping by, not thriving. And what kills me about this is that a lot of these people are people who want to work and the jobs simply aren't there, which would explain too why we are seeing a trend with recent graduates, those with bachelor degrees. Their unemployment levels are actually higher than the national average. Why is that? Because forget how hard it is to keep a job right now. We're going to talk about layoffs in a second, but entering the workforce without a work history is proving near impossible for many. But all of this to say, things are unfortunately about to get a whole lot worse. Let's take a look at this Business Insider article that talks about last Friday's jobs report. Now, in May, 139,000 jobs were added, which supposedly was good news because it beat the 125,000 estimate, but not so fast. Before you celebrate, at the same time, they started revising down past months. And this is not new news. I've been talking about downward retro revisions for a long time, but there is something different this time around, which I'll get to in a second. Now, March's initial figure of 224,000 new jobs created, guess what it was revised to? If you don't know already, it was slashed in half to 120,000 jobs. How do you get that so wrong? I'm sorry, but at a certain point, I call BS. Something does not add up here, right? Oh, and they go on to say, it's likely that May's figure is inflated too. Go figure. You think if you look at every single month going backwards, there's only a few months that were revised positively. Almost all of them have been revised downward. And this article goes on to say that on top of the revisions, this is where it gets interesting. Hiring has also appeared poised to slow. Now, in the past, we have been told as these revisions were going on that hiring was going to be increasing, but now they're finally coming out and saying that hiring is set to slow. The NFIB Small Business Hiring Intentions Index slipped to the lowest level since May of 2020. May of 2020. Things are worse today than they were a couple months into the pandemic when everything shut down. What does that tell you? Of all of the indicators that we track, it goes on to say, this is the best single indicator of payroll growth we've found in the last 3 years. So as far as accuracy goes, this tells you that things are about to get a whole lot worse. Now, in my line of work, I actually hate being right because when I'm right with the types of topics I talk about, it often means that there are real people out there suffering real consequences, such as a hiring slowdown, making it harder for people to get work. But this isn't just about hiring either. We are seeing layoffs happen at an accelerating rate, something I warned about at the end of last year. I said this year we could expect to see even more layoffs. And since January 1st, there have been over 2,000 companies that have announced mass layoffs and much more to come. Just last week, Amazon CEO came out and said what many have been afraid of, that AI layoffs were coming. Now, I believe that many people out there are not aware of how serious this is. We're not talking years in the future. We are talking an immediate impact. Now, Jerome Powell came out this week and said artificial intelligence might replace jobs on a large scale in the next few years. But I personally don't think we have a few years. I think this is happening right now. Microsoft just coming out this week and saying that they're going to be slashing thousands of jobs. And this isn't just a tech issue either. I saw another article here saying that the biggest companies across America are all cutting their workforces. And this isn't just Amazon. There's a growing belief that having too many employees will slow a company down, right? As more AI is integrated into the workforce, it's not just assisting the people who are already in that workforce. No, it is replacing jobs. And I think companies see the writing on the wall of an economic slowdown. That's really the larger concern that's happening here, is how can these companies be flexible and nimble? That's what they're trying to figure out. In fact, corporate bankruptcies in Q1 of this year were at the highest level since Q1 of 2010, following the great financial crisis. Again, if that doesn't tell you something, we're hiring like it's 2020, we're bankrupting like it's 2008. What does that really tell us about what's going on? Again, the surface might look strong, but underneath there are serious problems brewing, you guys, because this is not just about companies panicking for no reason. There's a reason that they are cutting their workforces and trimming back and trying to be as flexible as possible. And it's what's going on with the United States economy and specifically the dollar. Let me explain, because this is where it impacts all of us, no matter what your current state is. Now, this week on CNBC, Danielle DiMartino Booth, an economist who I'm sure most of you are familiar with, she's been on our channel before, she came out and said, get whatever work you possibly can. She went on to say, it is time for a CEO to be working 20 hours a day, a CFO to be working 18 hours a day. The more efficiently that companies are being run today, the greater prognosis for their survival. Essentially, she's saying things are about to change rapidly, and now is the time to really dig in, because you don't know what's coming tomorrow. She goes on to say, get whatever work you can, lean on your relatives, save to the extent that you can. Essentially, batten down the hatches, because there is a storm brewing. And again, this isn't just because there are willy-nilly panics. She's talking about America adapting to a fickle economic and political landscape, and that the value of the US dollar may ultimately be put at risk. That's the kicker right there. Think about it. How can a country that has 1 in 4 people who are functionally unemployed, that has corporations that are slashing thousands of jobs, that have college graduates who cannot get a new career to save their lives, be the pillar of financial stability globally? It does not make any sense. And as an acceleration away from the dollar continues to gain momentum, these problems here at home are only going to get worse. Now, she goes on to say, I hope for my children and grandchildren's sake one day that cooler heads prevail and we figure out how to put our fiscal house in order, because it's never ended well for countries that assumed they would have reserve currency status indefinitely. What does she mean by that? Well, what she's saying there is that the United States currently has the global reserve currency, right? The dollar is the global reserve currency. But it's easier to get to the top than to stay on top. Right now, the United States is in a privileged position, one that they have taken for granted. If I'm going to be honest, I'm a patriot, but ultimately at the end of the day, we know that we have continued to spend recklessly. We have weaponized the dollar at every turn. We have taken that privilege for granted, and it is now jeopardizing the dollar's role on a global international standing, which means that countries are ditching their dollar for other assets like gold, something that doesn't have a counterparty risk, something that can't be devalued by more currency creation, and something that can't be weaponized against them when you disagree with another country's policy. That is the bottom line. All of these countries are now waking up and realizing that the way the system is set up is not benefiting them. And as they continue to move away from the United States, it jeopardizes the dollar, and we are seeing this play out now in the labor market, something that is only going to get worse. In my opinion, this is a wake-up call for everyone watching, because this is only the beginning. As things continue to get worse, what's going to happen? We already know the United States government is going to step in, and they are going to print, and they are going to spend, and they are going to try to help the American people, all while devaluing the dollars in your wallet, meaning the value of your savings, your retirement is going to be worth less tomorrow than it is today, unless you're protected outside of the dollar, outside of their system, which is, of course, why I personally protect my wealth with gold and silver. Now, if you don't already have a strategy in place, a plan in place that has gold and silver at the center of it, and I'm not just talking any gold and silver. I know there are always questions. What kind? How much? What do I need to be doing? Should I have cash? Those are all very important questions, and that's why I say a strategy very intentionally, because that is what we specialize in here at ITM Trading. So if you want to find out how we can help you answer your questions and get you prepared for what's coming next, call us at the number below, scan the QR code, set up a time to talk to one of our expert analysts who can help you protect your wealth so that you can sleep well at night too. And in the meantime, I so appreciate you being here. I'm Taylor Kenney with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.